All right, well, good morning, active traders, and welcome to our Trading Week Ahead broadcast for today's Saturday, January 30th, 2021. Markets are in decline. We're going to look at strategies to hopefully help us all do better, do well with the market profile of what's going on next week. As always, all information is for educational use only, not making advice about what to buy, sell, or hold, etc. Anyway, let's banish the PowerPoint slides. As always, our information is provided to you as sponsored by my live room at Trading the Open. If you want to try it out, you can get heads up 5 days a week for specific entries and exits and live market calls and coverage for what's going on in our markets. We like to cover instruments. Kind of like these, right? I like to give people specific alerts when we see where things run. So anyway, with that, let's get on with it. So let's start off with a quick question. We saw some relative sell-off strength in the markets both Wednesday and Friday. You can see that in the S&P chart here with the large candle red on Wednesday, there's Thursday, and there's Friday. A couple of key technical indicators. One is that we lost the 50 SMA, the 50 simple moving average line, which is the red line. That by itself is not extremely significant, but it's the start. It's kind of like the market's been snapped. Now we want to see if the selling pressure accelerates, and we can look at the VIX and our other market internals like the ARMS index, the trend, to give us a clue. But first, a question. Do you guys think we're going to get a small correction next week or a large one? Or we may get a pivot to the upside, but it's more likely we'll get a small or a large correction in the upcoming week or two. Cast your vote. Type in the word small or large. Are we going to get, if the markets do sell off, I mean, it's certainly possible we could go right back up again. But if we do see any continued selling, which is widely expected by most of us who are professionals, do you guys think it's going to be relatively small or the start of something much larger? I'd be interested in hearing what you say. We got small, large, large, small, small, large, small, up, small, down. Hey, thanks. Thanks, Keith, Steve, Bryce. Hey, Mira. Hey, Phil. Hey, Harold. Hey, William. Looks like most of you are saying small so far. So good to hear it. All these responses scrolling by. Okay, well, the main thing we want to start taking a look at is the VIX, right? The volatility index is extremely important. We are currently we broke out to new highs, at least a 2-month high on Wednesday. You can see we're still over 30. What the street's looking at is the VIX to stay over the 27, the 200 SMA, right? That's the yellow line where it's at 27. The 200 simple moving average line is the strongest single technical indicator that we use to identify sustainability or breakout or breakdown pressure. Now, the 50 is often the weakest, but an early warning sign. The 100 is the blue, and the yellow is the 200 simple moving average line. The point is our volatility index, the VIX, is way up here, ran up all the way to 37, did what's known as a mean reversion or 50% pullback on Thursday, and then rallied up a little bit yesterday. So with the VIX up here, that's got every professional trader's eye. Here's a quick tip. If you want to be more effective potentially as a trader, spend a lot more time on market internals, particularly the VIX, as well as the S&P index, because this magnifies volatility. It's a much bigger magnifying, a more effective magnifying glass than just simply looking at the S&P. Use them together in tandem. So with the market dropping, things like our inverse instruments are starting to go up, right? Things like Uvxy and most of the other inverses that have similar patterns. Now remember what I said, a recovery above a 50 simple moving average line, the red line in this case, is still a weak signal and often generates false breakouts. But a recovery above the 100, which the Uvxy triggered yesterday, is significant, and that's very important. So I'm long, moderately decent size in most of the inverse instruments over the weekend, and we'll see where they go. Hey, quick tip. While the talking heads and the media are all talking about GameStop and fretting and wondering what to do about it, professional traders, we ignore that stuff, right? Excuse me. Things like GameStop and AMC are one-offs, they're noise in the system. What I care about is making money, and I'm not going to trade GameStop. Are any of you guys trading GameStop? I'm just curious. I'm not, because I'm trading this because it's a consistent chart. I'm not trading GameStop because it's all over the place. Now, good luck trading a stock like this. It's got this is a 4 days worth of price action in GameStop. Virtually impossible to trade consistently. You may hear these one-off stories about some guy paid off his college loan debt or something with a single trade. What you don't hear about is all the tens or hundreds of thousands of people who lost their shirt trying to trade this. Inconsistent wide range charts, the bane of traders, whether they're high priced flyers like this or the cheap under $10 low float pop and drop $3 latest biotech stock that got some good news and then crashes back down in market. You don't want to, at least I don't like to advocate trading instruments that are inconsistent, that are wild like this. No Wall Street, or I should say, very few professional traders would even consider trading things like this. You don't hear all the horror stories. The popular media says, they'll tell you about people claiming to make fortunes. I call it BS. I say at least 90, I'm 100%, well, I'm very confident that the majority of people trying to trade this probably lost their shirt and will continue to do so. So you may have some one-off wins, but inconsistent charts like GME are horrible, and I'm not going to trade it. AMC, horribly choppy. Why would you trade that? Tesla, epic fail. I called the short a couple weeks ago, and I said if we lost 794, which we did yesterday, Tesla may be in for a big beatdown. How many of you, and I'm not going to check because there's so many of you here today, how many of you agree with me that Tesla may be overdue for a very big pullback? If you take a look at the one-year chart, I was looking, and a lot of street traders looking for a loss of 800. And if you look at the 1 year on this guy, now who in their right mind would buy Tesla here? Seriously, that looks like a sell me chart. That looks like, hey, it's ran up. It went from 100 a share to almost 900. It broke right a few pennies over 900 a share and then collapsed on Tuesday, right? So it started Tuesday and then it's been selling off sharply. This would be a pretty stupid chart to trade in my humble opinion. One that I do like though, however, is Canopy Growth. I'm still long Canopy. That one looks good. It's not a overextended chart, and if you kind of zoom in on the 90-day chart, I like the cannabis sector. And Canopy Growth is my favorite blue chip of the sector. Tilray is also good. But what you look for are things like large full row body green candles with a consistent trend. See, smart traders trade things like this. Morons trade something like, well, I shouldn't say morons, but less sophisticated people who are gamblers would trade something like this. This is a horrible chart to trade. Why would anyone? Anyway, I like charts that are consistent, and have relatively strong uptrends. Now, if you're looking for inverse instruments, one of the things that I like is some consistent recovery on high volume. And you can see the Uvxy chart has 3-month high volume on Wednesday. And we're just getting the party started, right? And these are the kind of instruments that I like to cover in the live room. Things, whether it's like this or whatever the day's flyers are that make sense and have relatively consistent price action. So things like Uvxy on large volume on a pivot is interesting to me because of the ginormous upside. Last year, how soon they forget, when the market sold off less than a year ago in March, the Uvxy split adjusted was over 130 a share at the peak. Now it's on sale for only 15. I've been buying it from 10. I was buying it off the 52-week low, or 10 even, I think was the 52-week low, or 10.20, something like that. And I've been buying it off the 10 base, and it's currently right near 15. There may be significant upside to it. And the way to learn how to trade that, in my live room, we cover both day and swing trading strategies for the inverse instruments, as well as whatever the day's high flyers are. I like, my favorites are Uvxy, SQQQ. So these are instruments called inverse ETFs. exchange traded funds or exchange traded notes in the case of the Uvxy, and they go up when the market goes down. I'm an expert in trading them. I profitably traded VXX on the flash crash day, however many years, 12 years ago, whatever it was. So a lot of experience trading these. I'm the guy you want to learn from. Seriously, of all the people out there in the entire trading education industry, I'm the only guy I've seen who's shown P&L proof of real money trades I've made, right? Trading things like that. For example, I bought TVIX down in the 50s and sold at 940. Let me pull that up here for you. Here's P&L proof. The last time the market sold off, I was trading TVIX, which has unfortunately been discontinued since then. So now I'm trading Uvxy. But you can see here's P&L proof for my Fidelity account. I had bought TVIX at 46, 51, 267, where it was 51, 267, and I sold it at 900. So as much as a over $800 per share win in that. And that's just in the course of just 3 short months. This was my small account challenge. I tripled or nearly tripled a small like $1,500 account and went all the way up to just under 5K. And that's my equity curve on just a few months of price action in that. So who else in the entire trading industry can show proof with real money trades that they profitably traded like this for inverse instruments that go up when the market goes down? Nobody. Nobody I've seen, at least. So my point is I'm the go-to guy for this, and you're in the right time in the right place to look for how to trade these things. I also like SDAO. The neat thing about these inverses is that they all segment or they target a particular market, particular markets, whether it's the NASDAQ for the SQs, volatility for Uvxy, the Dow here, the S&P with SPXS, or our Russell small cap with the triple leveraged inverse bear ETF TISA, right? So same story, different charts, and they'll have really good upside potential. So those are the kind of charts that I urge you to maybe give some thought to working with. Now, a quick relative strength note. One thing that you want to pay attention to is when you're choosing which of these to trade, which ones have the biggest trading range, the biggest profit potential, and the least amount of pullback or chop. So when you're looking at the day's high flyers, whether you're trading things like GameStop or here's one, GBR, that had a big run on Thursday. If you do day trade charts like this, that's fine, but you have to know what you're doing, right? Because you don't want to over trade or trade incorrectly or trade too soon or trade too late. Charts with big ranges like this, admittedly, can make a huge amount of profit, but they also have big loss potential too. If someone had swing traded this and held overnight from 27 and the next thing you know, it's down at 11 or 12, that would be a bad thing. So the takeaway or one of the quick tips is there's some stocks that are good for day trading. There's some that are good for swing trading. There's some that are good for both, but there are also some that are not good for the other. So for example, this would be fine for day trading, but never for swing trading. So when you have these big wide range instruments like GameStop, those would be horrible for swing trading because you could, like buy it at 400 and have it cut in half overnight and you lose half your money. So you do not want to swing trade charts with exceptionally big ranges and high beta or high volatility charts. You want consistent, steady trending charts, like back to Uvxy or Canopy Growth. This is an example of an outstanding chart that I'm currently long, Canopy Growth, one of the many cannabis stocks that I trade. You can see it's got a nice stair-stepping continuous uptrend. Now notice the difference. Always evaluate. My point in all this is to try and keep you guys safe, right? It's like a doctor, Hippocratic oath, do no harm to the patient. Well, you want to do no harm to your trading account. And the way to do that is to do exactly what my colleague Tom Sosnoff says, trade small, trade often. That's exactly correct. And what I say is trade wide, not deep. So I throw a lot of darts at different instruments. The law of large numbers, I scale into the ones that work out, scale out the ones that don't work out. Anyway, consistency of trend is really important when you're swing trading, especially in this market. So from a relative strength standpoint, what happened with this one on Wednesday, the 27th, right? It went up from 34 to 39 on a day where the stock market If you look at that, well, let's look at this spiders chart. And the stock market's been stair-stepping down. So the point is, if you are swing trading stocks in this market, it's probably not a great idea unless you see that they have good relative strength and they're doing the exact opposite of the market. They're going up despite the market going down. That's an exceptional relative strength indicator. And that's kind of like trading 101. But keep it in mind, you don't want to trade, at least I don't want to trade things like I would never buy Tesla up here. That's the Tesla chart. It looks remarkably similar because it's a component, you know, the S&P now, of the spiders chart. Charts that are crashing and burning with the stock market in the direction of the sell-off are not ones that you want to swing trade. You could still day trade them on reversals, but personally, I prefer to day and swing trade stocks that are going up, regardless of what the market's doing, right? And especially what the market's doing in the case of instruments like SQQQ and Uvxy and SDOW. One quick tip too is make sure that when you're looking for emerging breakouts, you're looking for expanding ranges. The day-over-day trading range should be reasonably healthy lately. The way to look at that is on the daily candlestick chart. Let me show you what I mean. So remember, what we're looking for is expanding candles, or larger than average candles. And the best chart interval to use that on is your 3-month chart. The 1-year chart, the itty bitty candles are hard to see. At least if you're getting old like me. I just turned 57 years old a week or so ago, and getting older and hopefully a little wiser. Anyway, you're looking for expanding candles. This is my single favorite breakout candle pattern. Small candle followed by a larger whole body candle. That's especially when it breaks over a Western technical like the 50 SMA and the 100 SMA and the 200 SMA. So itty bitty candle followed by a larger, at least twice the height candle in an uptrend, especially on increasing volume like this, is a clear and present breakout signal. And so that's the kind of chart that you want to eyeball when you're looking for new swing trading setups. Is you visually scan through all the charts, and she may buy a pivot off a hammer or a breakout above a consolidation or previous resistance area. But the best momentum pattern is small followed by a large whole body candle on increasing volume, just like this. So that's why I'm long this one over the weekend. Well, thanks. Thanks, Bill. Hey, Chris. Chris is saying, Amir Youngin. We'll see. It doesn't feel like it's up to. Hey, Phil. Hey, well, all these questions. Thanks, everyone. Hey, Keith. Keith is saying the inverse instruments are not easy to access in the UK. Well, that's too bad. Well, maybe you can buy index puts, right? Buy spider puts, right? You could do that. There's more than one way to skin a cat, right? So I'm not a heavy options trader, but if I were, now might be a good time to look at either weekly or monthly puts with a popular strike in the S&P for the SPY. So buying index puts is another way to play a market sell-off in addition to trading things like our inverses. So is everybody crystal clear on this? This is a very, very good pivot pattern. And this can serve you well in any stock that you're trading for the rest of your life as well. I've used this for near 20 years. You're looking for, after a consolidation base or after a big drop and a slow uptrend, look for small followed by large whole body candles, meaning you've got increasing volatility, expanding ranges, accompanied by increasing volume. That's kind of like the trifecta. You're looking for a good recovery pattern where you have a small followed by large whole body candle. Now, which of these other guys has a similar pattern? I'm curious. SOX is not so much. TISA not so much. SQs, maybe a little bit. SPXS. SPXS does right there. There's one. So and this helps, you know, maybe you're trading silver, like SLV's been strong lately, or maybe you're looking for plays in commodities like oil, or you're looking for plays in semiconductors or healthcare, or whether you're trading value or growth stock index, value or growth stocks, or whatever you're trading, look for this kind of a pattern where you've got small, within the instruments, within the sector. You know, for example, if you trade semis, you're following AMD and Taiwan Semi and Intel and whatnot. Look for which one has better relative strength with that particular pattern to help you decide which one is the strongest candidate, right? Now, sometimes you get sympathy plays where one will lead the pack. So of all these instruments, Uvxy is the best recovery story. And the neat thing about it is that it is a lead indicator for all things bearish. So because it's a VIX ETN, so it's kind of like a lead indicator. Then you drill down, and I show how in the live room for which of these to give preference to in terms. And I trade them all. I'm long every single one of those except the SPY. I'm long all those inverses, but I have more size on Uvxy and SQQQ because they've got the best patterns. So anyway, good stuff. Hey, Chris. Let's see, question, what's the inverse of the spiders? Well, the SPXS, that's the S&P inverse. So SPXS, that's one you want to look at. Now, also, when you're doing a little more intensive, shorter term trades, what you want to, another thing to look for is, what's the reaction after the pullback day? Here's another advanced technical pattern to look for. When you have a big breakout day, odds are you probably missed it. I didn't because I trade this thing daily. So I nailed it and I made 1,600 bucks on Wednesday, but I do this all the time. So, but let's say you were following along with these things, and what you look for is after a big day that you may or may not have missed trading, there's going to be usually a pullback or a resting day, like inhale and a quick exhale. So it's like an inhale day. Everybody inhale on the count of 3. Humor me. Let's all get our minds and bodies working together. On the count of 3, inhale. 1, 2, 3. Whoosha, then a quick exhale. Okay. So I want to anchor this using an NLP term. I want to anchor this in your subconscious as well. So look for a big whoosh day, a big expanding day, and expect a quick pullback. Either a mean reversion, 50% pullback day, a small interior do nothing day, which I expected on Thursday. The trick is, and this is true for gap trades as well, for any stock, not just swing trading inverses, but for any stock gap trade, odds are you may have missed the gap day. Whatever you do, don't trade the day after the gap. Whatever you do, don't trade the day after a big, huge volatile breakout day, because the day after, this is very valuable intel. I've done tens of thousands of real money trades. I'm not a trade. The day after a big day is almost always a resting day or a pullback day or a choppy day that you don't want to trade. The day to trade is the second day after. So in this case, yesterday. Or if you're following it and just determining whether or not it's worth trading in a future day, look at the Wall Street reaction to the second day after the big day. And the main thing is, where does that day close relative to the close here? If you kind of connect the dots, as long as we're closing at a, this is an advanced tip that I've never shared before, so that's a long signal. So does everybody get it? You have a big day or a gap day that maybe you missed or didn't trade, but at least it got your attention. Don't trade the day after that day. Instead, follow along and see what the second day after does. And you can trade that day, or if you're still just following, give preference to a subsequent day if the close of that second day is above the close of the first day. That's good, valuable intel. That's something I should charge for. But it's a very effective, and potentially very effective signal that I've used for many years. So does everyone see that? Of course, all my competitors watching, oh, I'm gonna write this down, let me make some $10,000 course based on it anyway. So you get a big day, a resting day, and then either it keeps going up, which they often will. That's a good signal day to qualify a good setup. So for example, let's take a look at old Canopy Growth. Same story. And isn't this oddly, remarkably strong from a divergence standpoint? On a day where most stocks were dropping like a rock, Canopy Growth, like Uvxy, did really well. So this is the signal day, the big range day. This is the leave alone day, and this is is it still going up in an uptrend connected out on the closes day? And if it is, that's a very good signal for a continuation long swing trade. Now that kind of thinking is what I do for a living. You may have seen my award-winning articles, The Stocks and Commodities, my Money Show appearances, and I'm speaking for Money Show again in March. So remember that. I'll be a featured speaker in the Money Show Virtual Expo in March, coming up in a couple of months, or month after next. But anyway, that's a very good pattern to memorize, is large day, ignore, or gap day. Ignore, don't trade the day after the gap day or the large range day, but pay careful attention to the close of the second day after relative to the close of the gap or the breakout day. And as long as that's in an uptrend, you're good to go on the day if it takes out new highs. So for example, I'm in canopy from 33, I think it is, and I did not scale because the market was dropping this last couple of days. But I will scale into my canopy position if we break north of say 42.5 come Monday or Tuesday. Any questions on that technique? I think that's good. Do you guys like these kind of like advanced techniques that I haven't shared anywhere else before that are exclusive to the trading week ahead things? Because what I test, I was, excuse me, I've been doing a lot of broadcasting this week. I've been running the live room overtime, often until 11 or 12, or even 1 or 2 days we did all day long. So so popular. I got so many new members in the live room of people that are tired of the pump and dump cheap stock places. And they like a little more intelligence with their live room experience. So, and real money trades that I do. And right, Chris, yeah, SPXS did a reverse split. It was down to 3 or 4 a share, and then it reversed. It had a reverse split. So yeah, that's a trend line breakout to the upside once it continues up. So that's good information, right? Those are the kind of things that you want to learn. Okay, we got just a few minutes left. Quick reminder, do keep an eye on the VIX. And then of course it matches UVXY. We can't trade the VIX, but we can, and I do trade UVXY, and I was trading TVIX until they Credit Suisse delisted it. But anyway, with plenty of advance notice, by the way. Do keep a careful eye on the VIX. Summarize our thoughts here with our S&P and the VIX. A potential breakout to the upside, and specifically how to manage day and swing trades for this and whatever. This was a list of what we were looking at on Friday, right? Canopy, AMC, American, GameStop, and GBR. I think that's an energy company, right? Yeah. UVXY. Anyway, do pay careful attention next week to the VIX. We don't want to do much if the VIX kind of cycles around in between 28 and 35 or so. But if the VIX breaks 38, and especially if it gets over 38.50, that's a street savvy trader's technical resistance line. Is right near the 38.50, 39. We'll call it 39. If we get above the 3-month high, a 3-month high in the VIX is a clear and present danger to the stock market signal. They're inversely related. The VIX goes up when the market drops, right? So we got expanding VIX. That's a warning sign to the street. So that's why we had so much selling pressure yesterday. And as we take a look at our S&P next week, as promised, key support and resistance levels, I would use a recovery over 38.05 as the first sign of a bullish recovery. But really, we wanted to clear the previous high up near, say, 30. I would use 3,900 even. I would treat a bounce here as a bull trap. I only got a minute or two left. If the market does do a little bounce or so, just like Thursday was a bull trap. Does everyone understand that? I told my traders in the live room, Thursday was a bullish trap, and it was. And Friday, market got beat down. And I made money yesterday and Wednesday. And I sat on the sidelines on Thursday because I dodged a bullet with that bull trap. Anyway, a bounce and a downtrend does not a reversal make. So overly optimistic bulls were trying to go long Thursday only to have their heads handed to them yesterday. Key support level on this, we were using 35.50 because of how it's constructed, the 100 simple moving average is right near 35.70 or so. I'm still going to use 35.50. I'm going to start shorting the market aggressively via my inverses, and maybe I may dabble with the S&P index puts as well for options trades. But if we get under 35.50 in the S&P, that's a major support level. For the upcoming couple of days ahead, you can tighten that up to say 36.50. So The S1, S2, how to say, support 1 is 36.50, support 2 is 35.50. Resistance 1 would be right over 38.05, and that's R1, and R2 would be right over 3,900. So we've got some even round numbers that the street's going to be looking at. So do pay careful attention to the markets next week, and we've got lots of upside plays planned with instruments like Uvxy. It's finally woken up and it's gotten up out of the range here. The December range was around 12.5, 13. We're finally clear of that. So we've got lots of charts to look at coming up, and also guidance for specific trade strategies and coaching and answers. We're getting close, so I got some spots left. Let me scroll this guy up here. Anyway, my live room is trading open. I've located now to trademastery.com/live. And just a quick note, even if you've already trialed my room before, and normally I limit it to 1 trial because that gives people a good shot at looking at the room, and there's so many new members on board, which is great. Even if you have already trialed the room, because we've expanded the coverage and I've significantly increased coverage for swing trading as well as day trades, if you have not yet trialed the room, you can go ahead and do so. It's only $29 for a couple weeks and a money back guarantee and all that. So I'd like to work with you. So do give it a thought, and I will hopefully see you in the room. Just give me 12 to 24 hours from the time you order to get your GoToWebinar link sent to you, and I'll see you in the live room. So take care. Best wishes for success in your trades, and I hope that gives you some food for thought. The biggest takeaway, look at the VIX and the S&P, especially the VIX is more important to me. It's a lead indicator, so always use the VIX more importantly than just what's the index doing, S&P. And secondary is that pattern where small followed by a large whole body candle breakout pattern. And then third was after a gap or a breakout day, we sidestep the day after, but do get in on the third day if we have an uptrend continuation. So hopefully some good, useful tips that I would like to hear if if I were working with me, or things that can actually help you with your trade. So have a great rest of the weekend, and I will see you guys in the live room, hopefully coming up Monday morning. A lot of new features. We've completely revamped everything. So good to see so many of you here. Wow, thanks everyone for the kind words. Hey, thanks, Damon. Hey, Keith. Hey, Bryce. Hey, Bill. Hey, Cass, Steve, Phil, Trey, Harold, Chris, Mira. Thanks, wow, big turnout. Thanks, everyone. Hey, you guys too. Have a good one. Stay frosty, trade smart, trade small, make it safe, and do well out there. And I'll see you guys next time.